Hello. Hello. Good afternoon, everyone. On behalf of India Factoring and Finance Solutions, I welcome you to today's live show on emerging trends in trade finance and supply chain finance. India Factoring is a registered authorized dealer 3 with the Reserve Bank of India. Uh, we started our operations in 2009 and we offer non-recourse supply chain products. Our flagship product, the export non-recourse product, allows our customers to avail uh, trade finance facilities without recourse, which means that the facilities availed do not appear as a liability or as a loan in the balance sheet. So it's quite an interesting product. Let me now welcome our guests to today's show. Our guests are highly acclaimed personalities in their respective fields of specialization. Let us first welcome our first guest, Mr. Kishore L. Narayanan. In his current role in TCS, Kishore is leading transformation efforts for commercial banking and capital markets. He comes with more than 22 years of experience in the banking industry and has worked for top tier banks like Citibank and HSBC in various leadership roles including relationship, sales, transformation, governance and operations. He collaborates with internal and external technology partners to develop new age solutions for the banking industry using emerging technologies like artificial intelligence, machine learning, and natural language processing. He closely works with product, operations, and IT teams of the banks to reimagine their businesses and to make bank future ready. Kishore is a certified documentary credit specialist and has a master's degree in computer applications. Thank you for joining us, Kishore.
Thank you, Ram. It's a pleasure to be here. Good morning, good afternoon to all. So we say trade finance, that is a cusp of digital transformation. You rightly scheduled this event at 12 o'clock in the morning, say where we transition from the morning to the afternoon. And we would want to really keep it very interesting and intriguing for the audience. And thank you again for having me here.
Thank you. Thank you for joining. Allow me to now welcome our second guest, Mr. Ravi Valecha. Ravi Valecha is the current CEO of India Factoring, and before he was elevated to the current post, he was working with top banks like Citibank and HSBC. Under his leadership, India Factoring since the year 2015 has only looked up. The portfolio has only been growing northwards, and Mr. Ravi is an expert in trade finance and supply chain products. Thank you and welcome to the show, Mr. Ravi.
Yeah, hi Ram. Thank you. Glad to be on the show with Kishore to discuss some insights on the emerging ways forward on transformative practices under trade finance and factoring supply chain finance. Looking forward. Thank you.
Thank you. Thank you. So we'll start our show right away. Trade finance is quite a vast topic, so let's jump into the topic. So our first point of discussion would be something like this. Cross-border trade is quite a tough product. It involves so many parties, the buyer and seller at the forefront with their contracts, the customs officials, warehousing providers, technology providers, authorities, regulatory authorities in both the countries. So there's so many people involved in a cross-border transaction. So, to put this in perspective, to move a single product, say from one country to another country, it the documents have to be scrutinized by at least 20-30 people. That takes time. So I just wanted to understand from Mr. Kishore, how does technology help in simplifying documentations?
Sure, that's quite an interesting question. See, complete transformation of business is what the trade finance as a domain is going through. So they are looking at an end-to-end aspect as against pointed solutions, right? Which was the name of the game, say, a couple of years back. But now they wanted to really look at all the facets of the business, be it how the customer journey can be redefined, how the branch operates, how the mid office operates, what are the deeper insights that they could get using analytics. So the idea is to really touch the lives of all stakeholders involved in trade finance. So to really look at this from a point of view, we need to break it down into three different components. See, one is digitization, another one is the automation, and the third component is the analytics. Digitization is key because we need to first digitize content at source, which will enable your downstream automation. So that is where the banks and stakeholders are looking at how to digitize the documents, be it either through a cognitive OCR, which is much more accurate and it's highly efficient because of the machine learning and the AI components in it. They're also looking at how to use digital channels because basically trade finance documents are already in digital in nature. So we are trying to see how best we could ingest those documents directly using the digital channel. For example, an online banking portal which will enable the end customer to directly upload the documents without even they printing and sending it to the branch. That's one way of looking at digitizing the data. So with these two solutions, they get the digital data automated or the data extracted, and then they bring in the automation components, which is where the rules of the ICC, the product related rules, you could be your UCP 600 or URC 522 can come into play, where they built a cognitive rule engine to really use this digital data, automatically do the scrutiny, and then throw an output which could be leveraged by the processing team or the agents in the mid office or the back office. And even the compliance aspect, which is again one of the important areas in trade finance, it continues to be an Achilles heel for most of the banks because any breakages there will lead to punitive actions and penalties. So that's where the solutions are like RegTech are coming into play in automating the areas of compliance. Customer service again today is predominantly manual, and it is really not helping you to increase the speed of service, or it is not really seamless, right? If I really want an information, I'm not getting it in double quick time. So that is where they're looking at some of the solutions like chatbot or even email automation to really look at reimagining that customer service as a function. And then comes the analytics. This is where we are looking at something like a command center model, which will give you a deeper insights. What you have at best today is completely, say, descriptive in nature. But however, what we are looking at is something which is very predictive and prescriptive in nature. So you get insights from history, you get details about how the real-time monitoring or real-time processing is happening. For example, Swift analytics, your productivity, compliance-related analytics, and all those. As it happens, can I get more insights? The last one is the predictive models, where I can look at business forecasting, dynamic pricing model, which is very unique for trade finance as a business, right? Because we have seen dynamic pricing in the Amazons of the world or even the hospitality sector. But when it comes to trade finance, it's more or less static. So what we are looking at is doing a sentiment analysis and dynamically price a trade finance product at a transaction level for a customer, depending on the market sentiments as well. So these are different ways in which we could really look at reimagining trade finance as a domain and bring in a technology as an important lever and an enabler so that the banks and the other stakeholders can easily compete and grow in the market.
Absolutely, absolutely. I'm sure that going forward, all these initiatives from organizations like TCS and so many tech giants will help in simplifying life for exporters and importers. Ravi, your views on this topic, if I may ask you, please.
Yeah, first of all, Ram, I think my camera is off. I put it off for the bandwidth reason to
Okay.
enable I can speak. Okay, now obviously, from a tech point of view and from automation, digital, and all those things, you have the experts' views. Kishore had rightly said all these perspectives, which is quite appropriate. More appropriate, even more appropriate for the trade finance world. The reason I say is that trade finance actually is a very, very document intensive process. For an leave apart from the domestic transaction, the international transaction is besieged with the documentation galore. You have various shipping documents, bills of lading, and whatnot is there attached. So all those things require reliance heavily on paper actually. Till today, because of the bill lading and the shipping documents and various parties are involved. It's not just the buyer and the seller. It's possibly the freight services provider. It is the shipping company. It is the customs houses and whatnot is involved. Now, till today, the global world has not found interoperable solutions, which is working in a seamless manner at a uniform level. You have bits and pieces, possibly in Asia, possibly in some parts of the world, which have collaborated together to put in place some automated or digital initiatives. However, till we reach that stage where everything is synchronized in a manner, we are still looking at the futuristic point of view that this is what it can be. Having said so, the importance of digitalization, automation cannot be done away with. Particularly so, we have realized, especially since the COVID pandemic times, that we were all forced to work remote. In fact, today also some of us continue to operate in a remote mechanism, and that's where the importance of digital lies, that you cannot have document in your hand to process the transactions. And also in domestic transaction, the implementation of GST and in India was a path breaking, I would say. It was a completely disruptive and paradigm shift from a domestic transactions perspective. Today, at the click of the button, you get information about the genuineness about the transaction, which is a key factor for digitalization of the trade finance, and one of the most important aspects to prevent against the fraud elements. Similarly, there are initiatives being done at the global level. The solutions which we use today for the domestic transactions are being scaled up to put in place similar checks and mechanisms basis the SWIFT, and riding on the SWIFT and other informative solutions already available to check the genuineness of the transactions, to check the validity of the transactions, and whether or not the goods are getting delivered. There are solutions which provide you end to end where the goods are actually touching. So this is one aspect of it. Apart from that, also there are operational efficiencies which are the need of the hour when you process these transactions, and that's where the AI, ML, and likes of the automations comes into the play. So this is a vast topic, but this is the future, and I'm sure that in next few years we are looking at much better processes, automation solutions being available and implemented by banks across the world. Thanks.
Absolutely, absolutely. Thanks, Ravi. We will now move on to the next question, or the next topic of discussion, rather. Over the last few years, the government has been actively promoting online platforms for domestic trade, such as the TREDS trade, e-receivable discounting system, M1 exchange. Such platforms have definitely made trade finance more accessible to smaller SME and MSME enterprises. And Of late, these platforms have also started reporting a high level of profitability. So it's success on the domestic front. Kishore, I wanted to understand from you whether we are looking, or whether we are envisaging similar platforms on the cross-border trade, because that would help in bringing buyers and sellers together at an online platform. So what are your views, and how do you think this is can it be achieved?
Yeah, Ram, in fact, you hit the nail on the head in terms of what's the need of the hour, right? Because today we are talking about $2 trillion of trade finance gap across the globe. And this one is what they're saying is the report says it could even go to $3-4 trillion if not addressed immediately. So that is where TREDS and M1 Exchange are local supply chain solutions. It's a kind of a reverse factoring, enabling finance to the suppliers. So at a global level, we are also looking at similar solutions being envisaged, kind of a marketplace, right, where you bring all the stakeholders together, especially the buyer, seller, and the financier. So that is where something like an open banking is a great enabler for this. Now we have options of building marketplaces where we bring in the banks, we bring in the buyer and the supplier, and strength of the buyer, we could even finance the suppliers. So one such example is something like a trade information network, which has been established in the US. So top six banks, be it the HSBC, Citibank, Deutsche Bank, Standard Chartered, BNP, and even ANZ came together to build this small marketplace to address the needs of the supplier within the region in Americas. So that is something working well. But going beyond that is also important because we wanted to look at a complete cross-border marketplace where we not only finance the supplier on the strength of the buyer, but also basis the supplier's credibility and credit assessment, can we do that financing, right? That is going to be important. And that's where the role of the aggregators, continuous credit assessment solutions are going to be a key. And one such impediment to this is currently that there is no particular standard and legal recognition that is happening. However, good news is that the UNCITRAL, which is the United Nations Commission on International Trade Law, has come up with some of the model laws for transferable records, especially the electronic records. And BIMCO is again something Baltic and International Maritime Council are looking at how to bring in more e-bill standardization and more standards with respect to trade finance as a domain. Why this is critical? Sometimes the financing itself is done on the basis of the strength of the BL itself, like even Ravi was talking about, right? How critical it is when we talk about the electronic BL and also the other facets of automation in trade finance. So those could really be happening in the next 1 or 2 years, but I'm sure that the pathway has already been laid, and it is in less than 2 to 3 years we'll get to see such kind of a marketplace.
Okay, okay. That's quite an interesting perspective. So you're saying that it has already efforts are already underway in the US and the EU. So
Correct. They are
let's
taking
hope.
it in pockets, but they wanted to expand it to the globe as such.
Okay, so let's hope that in Asia also such developments start. Ravi, would you like to add anything on this?
Yeah, right. Point, Ram. This platforms, what we have seen, the emergence of regulator-defined platforms. There are differences between private platforms. There are private platforms across the length and breadth of the world today. However, India has a unique advantage, and probably a couple of other geographies also have similar advantage, where this is a regulatory enabled platforms. So we have domestic threads platforms. Three platforms are already there. Possibly there can be two new platforms which can be added. Now, obviously, that means that there is enough business expected to grow on the threads platform. So first few years, the threads volume was insignificant. However, last year onwards, we have seen emergence of good flows. This year, the flows are expected to double up amongst all three platforms which are running the local domestic platforms. More so, the regulator, that is, there is, I'm sure you would have heard about the IFSC, that is the Gift City initiatives in Gandhinagar, Gujarat. That is a new initiative, and the regulator, it's a uniform regulator which has been created directly under the Ministry of Finance, and they have set up another initiative for the similar platforms like Threads on an international trade finance possibilities. So that the sandbox testing is expected possibly in next few weeks from now, and we are like as expected among the first few ones to participate along with the platforms as a financier to test out that environment. So this is just first step towards digitalization and initiating these processes. However, it's not only limited to the platforms what we are looking at, because internationally the factoring, the supply chains is run in a more traditional manner. When I say traditional, it is a legally unique model which requires the entire turnover to be routed, because there are legalities, there are risk mitigants which require that the whole turnover is to be done. There are efforts to digitalize and bring on reforms towards that also, and you will hear from us soon that what more is India factoring doing towards that, how we are making it more friendly and more approachable, and creating that awareness about the factoring and supply chain across the world. So more things to come, you will see in next few years.
Okay, so great news from the gift city, and a lot of initiatives are happening there, and I'm quite excited to know that we would also be jumping into this hot topic soon. Ravi, my next question would be to you. You know, trade finance is quite a old sort of topic. It has been there since the 18th century. Trade has always been there, but you know, now it is all about sustainable trade finance and sustainable development. You know, there are so many goals which have to be achieved on the sustainability front. So if trade finance could be more, you know, if we could take more initiatives on as lenders, we could, if we could take more initiatives, if we could push our clients, don't you think things would move faster? So what are your views on you know, inculcating a trend of sustainability in trade finance?
Right question again, timely, I would say as well. And you would see, there are a lot of regulatory requirements, in fact, coming in place towards sustainable finance requirements, more so emerging from the Basel emerging requirements also. So soon it is going to be mandatory across the world as per the Basel III norms and future for having this ESG and the sustainable requirements. Now, what can, obviously, apart from regulatorily, there is an push which is going to be driving down these requirements from a financial services point of view. You would be surprised. Likewise, push is also there from the end user, not end customer, but the manufacturers, the global companies also as such. I can give you one example that the global manufacturers, the global brands, the big brands, what we call in apparel space and all, they mandate these requirements from their vendors across the world. And just to share some insights, these can be as intensive. How do you, because all the clothes which we wear require some bit of dyes and treatment on chemicals or something like that, which is in earlier days used to be released in the surrounding environment, be it soil or be it in the water systems. Now, over past few years, we have seen the trends emerge that these are required mandatorily to be treated before being released, so that they are environmentally neutral. These are the emerging trends being mandated by the global brands because there is an immense pressure, and rightly so, from the end consumer, that the brand needs to be conscious towards having a sustainable product delivery. So from that perspective, the requirement is already there, the regulatory push is also coming in, and soon you are expecting, in fact most of the banks and financial institutions do keep and an outlook on what the sustainability requirement is being followed by the end borrower at their end. Even in India factoring, we do consciously review the customers, what they are doing about the sustainability, how they are treating the plant, how they are treating the water and the surrounding, how they are contributing towards the overall sustainability. When I talk overall sustainability, it's also about, when we say ESG, it is environment, social, and governance. So while we keep a bigger window, and perspective focus is there on the environment, we miss out on the SNG also, which are equally important components towards sustainable. And towards that, most of our exporters which are there in India, they work towards the sustainability by having financial inclusion goals, possibly employing peoples in the local vicinity, having women workers, and doing all the supporting mechanism, putting in place all supporting mechanisms to ensure that these women and the financial inclusion aspect is taken care of. Even locally, most of the governments enable these financial inclusion aspects by providing some incentive locally to make it, salary subsidization and whatnot, towards contributing towards these sustainable goals. But yes, on the matrix point of view, that on a model point of view, that is what is being implemented across the world, and soon you'll have within India factoring also that as a matrix driven approach towards assessing of the customers, and you will soon hear that you may reject some proposal because of sustainability also. So it's there already. I don't see that it is going to be there in future. I see it's already there. Thanks.
Great news on that front. So we are sort of handing over the world to the next generation. So we should do our bit, and that was good news to hear, Ravi. I'll move on to the next question. Mr. Kishore, wanted to seek your views on this. Do you think technology can be an enabler in preventing frauds or in risk mitigation? And and how do you think technology bridges the trust gap between two parties based at different geographies? The seller is always interested in his in getting the 100% payment for his exports, and the buyer is always interested in ensuring quality and all that. So there is a trust gap. So how does technology help in bridging this gap?
Yeah. So, like I said before, Ram, technology has been a great enabler in building trust between stakeholders in business. So that way, what we are looking at is digitization brings in more transparency, standardization is possible, speed of service is enabled, and also in a way it helps to build a rapport with within the stakeholders. And how is it possible? Because, for example, in DLT or a blockchain ecosystem, I have a single source of truth which is spread across all the stakeholders. There is more transparency. They get to know what is really happening in the system. You know your transactions even better than a normal way of doing a business, which is very conventional, where I print the documents, I send it, I do not really know where it is lying. Is it really discrepant, or is it even compliant with the letter of credit terms and conditions? All these are something not very transparent today. But however, with technology, I would get to do smart contract validation, which will enable me to get the results as and when the documents are presented. Everybody gets to know what is presented and what's the outcome of that. So that way, technology can help you build an even stronger relationship between buyer and seller. And that's one of the reasons I think why we will even move from collections, letter of credit towards an open account. So that will be enabled by technology. On your other question with respect to risk, today, Ram, close to 35, 40 million dollars are being spent by large trade finance banks to manage risk as a portfolio. So today, the use of technologies like AI and ML can actually reduce the cost and help you mitigate this risk. For example, today, risk analytics is one of the important areas the banks are really concentrating, because that will help you to alleviate risk associated to payments or even the transaction as a whole. One such thing could be a pattern detections that you do, which can help you to identify any financial crime attempts. Because today we're talking about close to $1 trillion of transactions are being
That's a
passed
huge
through
number.
the banking ecosystem, as where there's a good chance those are all organized crime. So another example is where we could try and detect for frauds using technology is how you can do an enhanced bill of lading checks. When I say enhanced checks, I'm talking about container number validations, because these are all alphanumeric. We have check digit algorithms to identify if the container numbers mentioned in the bill of lading, is it a bogus one or is it a real one. Involvement of any sanctioned parties can be identified. You could also actually track the shipment from the port of loading to the port of destination using some solutions like Sea Searcher or the Lloyd's website. So all these are really enabled. Even we ourselves have got a complete suite of solutions called the TRADA, which is Trade Finance Digitization, Automation and Analytics, which addresses to most of the facets, in fact, if not all the facets of compliance, and try and mitigate the risk and embrace risk is something we wanted to do. We knew that the business as such is a risky one, but we have to see how we could embrace risk rather than completely trying to avoid it. So that's the nature of the solutions and the accelerators that are available today.
Great, great. So hopefully all these initiatives would, make things simpler for all the parties involved, because no one is interested in, slowing down the process. But the very fact that documents are slightly difficult and opaque to go through, it takes time. So I've come across cases where the ship is just waiting for some clearances at the port, and demurrage charges are being levied. And so all this digitization and predictive technologies should help in fastening up the entire process. Yeah, that was an
Absolutely, Ram.
interesting.
Yeah, absolutely, Ram. In fact, it brings down your overall processing time by almost 40-50%, which is a huge jump compared to where we are today and what it can really enable as a solution.
Okay, okay. Ravi, as a follow-up question, and I would like to have your views on this. You know, global trade in over the last few years has been gravitating towards open account, and open account is a term where the seller has the maximum risk, so he has to rely on the buyer completely. So why is this happening? I mean, in the sense, yeah, factoring is a open account product, but then I also wanted to know, why is the general trend moving towards open account, where letters of credits or documentary collections, like documents against payment or documents against collections, they confer sort of more payment security to the seller, but yet we see open account is what is being asked for these days. So any particular views as to why this is happening?
Yes, Ram. So you in earlier question you mentioned a word trust. So banking is essentially nothing but creating that sort of a trust between the counterparties, between the sellers, between the customer, and various other stakeholders. You bring credibility to transaction. What I say is trust, but you must always verify. So that's where the question comes in. In earlier days, used to be the information asymmetry was there. You could not access information which was there on the buyers, say for example in US or any part of the world also, and that's where LCs, the letter of credit, emerged. Right? You could trust a bank because the bank is underwriting, and possibly you knew the bank on the other side who was issuing an LC to take that sort of an exposure. In today's world, after the internet and past 20 years, there has been tremendous boom in the availability of information aspects, and that's where the world is moving towards more and more open account transactions, because the information is available which enables you to take a call. Today, at the click of the button, you know all the financials, all the aspects of the credit history, performance track record of the buyers across the world. Most so, I'm not saying 100% is there as yet, but yes, it is available to a large extent. And that's where the services of companies like India Factoring comes into play, where we are able to provide that information as an advisory to the customers through our correspondent network, insurance framework, on the availability of the limits, and also availability of the information on the buyer's credential, which enables some customers to take a call whether they need to do a business, or if they want to increase that business, reduce that business. So this is the information which we are talking about in today's world, where uh, information is available, and all what we say is today the data is the new oil, right? And that's rightly said, because the information availability today, which enables decision making, is the critical driver for the success of any organization, and so be it for the trade finance, which is the more so dependent on informations like this. And that's where the factoring services, banks do not provide the regular trade transactions. The banks do not care as much as who would be the buyers, because their risk is to the seller. That is a post shipment traditional finance which they provide. So they completely do away with the information, may take the information on the supply on the buyers. However, they will not deep dive into the aspects of what is the buyer's credibility, what is the transaction level, what is the dilution. And whereas in the factoring, our services are more completely reliant on the trade information, the underlying transactions, and which makes it more practical, futuristic driven, and enabling the customer to take better decisions rather than being focused on arranging working capital only. to concentrate on their core activities and leave the financial aspects to the experts like us. So that's my thoughts on that.
Yeah, rightly put, Ravi. Apart from trade finance, India Factoring has been offering guidance also and information, as you rightly said, to our clients. Our relationship managers do guide our clients as to what is the financial standing of their buyers and so on. So it's quite a value add for any exporter. Kishore, coming back to you, just wanted to know how would technology help in meeting compliance and KYC norms? KYC is quite a it's an old term, but then again a time-consuming one. So how does technology help in simplifying compliance and KYC requirements?
So something called regulatory technology, Ram, is the name of the game now, where we call it shortly RegTech, where it encompasses all the aspects of compliance, and the solution really takes care of the complete requirement around compliance. For example, it can do a sanctions SDN screening, where you can identify persons who are actually sanctioned or an entity who are sanctioned. And especially in a trade finance transactions, we got to really screen for your entities, your individuals, vessels, and any locations or any provenance that is part of the overall transaction life cycle, right? So it addresses your list screening. It also does something like a line of business checks. It could also identify trade-based money laundering, which is something even defined by FATF and also by various other regulatory authorities as to what is the extent of TBML checks that you need to do. And for example, it could be an overpricing of the goods, or it could be something related to fraud, where I said in the earlier question as well how enhanced due diligence can help you. And also looking at how we could know the transaction better. We were talking about KYC all along, but now the new term that is coming up is KYT. Do you really know the transaction first before even you know the customer? Customer, you can do the KYC at best when you onboard them, or you do it on a periodical basis, say 1 year, 2 years, every now and then. But know your transaction is something is very real time, and you got to do it on a dynamic basis, and it something helps you to generate a risk score or a risk category for a particular transaction, and that gives you a comfort that the transaction is a good to go or you need to stop and escalate, right? So these are the things that are being really enabled by the technology. You can ring fence the transaction, thereby the ring fencing the customer as a whole. And one another important area is how analytics is helping you, because based on the data lake or the insights that is already available in the ecosystem, I'm able to harness the all the details and try and unleash the entire potential using data analytics. For example, I could draw parallel to what are the different types of transaction the customer has dealt with in the past. Is the buyer seller combination dealing with the same goods? Or is something unique which is out of the way when we compare to the line of business of the customer? So all these can be targeted and can be identified using technology. So it's a really interesting area, and it's growing in leaps and bounds. And it will further continue to grow, and it will become even more better in the next coming years and months, which is what I see currently as a particular scenario in the industry.
Okay, so that was quite an eye opener for me. Reg tech, so I need to read about it a bit more. Thanks.
Yeah.
Ravi, coming back to you, could you explain how technologies such as blockchain or artificial intelligence or machine learning can be used in reducing several irritating inefficiencies in trade? Like for example, a few months ago there were container shortages, so no one really anticipated it. Like a container has moved from point X to point Y loaded with goods, and it's waiting at point Y because there are no goods there, so nobody wants to incur the charges of bringing it back to point X. So it was quite a simple issue, but it almost brought world trade to its knees. So could you help me to understand how these technologies will help in reducing inefficiencies?
Yeah. So technology, why does a technological solution or any other solution comes into the place is we need to have a problem statement, right? Um at the beginning of COVID, just taking a little digression, beginning of COVID, India didn't have expertise or manufacturing, capacities for PPE kits, the mask and whatnot. We were importing largely. Within 3 months, possibly we were surplus economy on that front, right? So as
Absolutely.
it's a need driven or a marketplace which determine what can be done. Capacities can be created, manufacturing can be set up in of course short time, depending on the complexity of the product. And likewise, the technological solutions also emerge basis the requirement which are emerging. Now, you mentioned these blockchain and various other AI and ML driven processes. Blockchain is possibly securing. You want to secure your transaction, provide end to end encryption services and possibility of securing your transactions. So that's where we are using the services on the domestic front, Ram. As an external vendor who provides the services to secure and check and verify the transactions of the genuinity of the transactions which is being done. As regards AI and ML, definitely it goes to an extent in providing, because they are riding on the information which is available, picking up information from various information sources, be it the credit bureaus, be it the GST network, be it any other similar databases across the world to verify the genuinity and actually the transaction being there. So that's one aspect of it. The double financing also is an aspect which is checked in these. It also ends up over a period of time. It also ends up providing credit aspects because the transaction history is created. The performance trends of the buyer and seller. What is the other credit aspects, the financials, the KYCs and whatnot. So there are tools available which provides you information which enables a credit decision making. In a very retail sort of environment, a credit card or small exposures, that enables you to make an end-to-end decision also. However, trade finance world, a little complexity is there. So today, the 100% reliance on an AI ML is not completely feasible. I mean, there needs to be a human element to take that final decision. The data through this AI and ML will provide you an optimum information, a ready reckoner that this is basis the data available. This can be the decision. However, the requirement of a human presence in taking that final call is very important, considering that we are an emerging economy as yet, and the local due diligence aspect cannot be completely done away with at this point of time. However, having said so, in future, if the information asymmetry is not there, the data is completely reliable, I do believe that that can enable decision making also. I hope I addressed
Okay.
that.
Definitely, definitely. Kishore, another question to you. These days, whenever I open the newspapers, or whenever I go to Google News or whatever it is, I come across this term metaverse, and it's the buzzword these days for all tech giants. So, what does this signify for banks or for NBFCs or say for trade financiers? What does the term metaverse signify?
Yeah. So any discussion doesn't get completed if not we talk about metaverse, right? So metaverse, just for the audience, it is nothing but a virtual reality environment where users and interact with the computer-generated environment and other users even in that environment. It's a kind of a virtual reality environment, which is created by the computer itself. So, how do you really interact with metaverse? We use VR or AR, which is virtual reality or the augmented reality headsets. It could be your Oculus or any other similar headsets that are available in the market. But what it can really enable you is something very important, right? And what's the business possibility? See, today the report says the metaverse is growing at around 40% CAGR, and they are expecting it to be $1 trillion in the next 4 or 5 years, or even it could be even higher. City even says
Huge,
it
huge
could be ten
numbers.
trillion dollars. right? Which is the possibility of the business. But for banks and NBFCs, what they could do. One important use case for banks and NBFCs is where they could create a customer service lounge within the metaverse where it enables their customers to come and interact with the representatives there, a kind of a lounge where probably I want to really exchange my cryptocurrencies. I want to buy something from the bank. I want to invest in the bank. So these kinds of product related decisions, it's kind of easily executable within a metaverse, and it is also can be tailor made for the customers who really come into that world. See, who really are being targeted for metaverse is the youngsters, the Gen Z, who truly believe that that is the right medium for them to access banking functions. And one of the important thing that you got to do is, as a bank or an MCFC, is that most of these dealings are will be in cryptocurrency. Banks should host a cryptocurrency to be part of these blockchain-based metaverse systems. For example, today HSBC is part of this sandbox where they're trying to create a customer lounge. JP Morgan was the first front runners and the pioneers when they really tied up with Decentraland to do something using metaverse. See, what can really transpire in the future is also something important. We could actually allow retailers as a bank to even sell their products. It could be retailers selling their products like, say, furniture, or even somebody selling houses. It can even be a avenue where you say buy now, pay later. Those kinds of avenues could be really created using metaverse. It's a quite an interesting prospect and a phenomenon at this point in time, but we got to really wait and see how it really builds up and whether it will have the steam and the momentum to be what people are really envisaging it to be, right? So that's something we need to wait and see, Ram, at this point in time.
Absolutely. Thank you. Thank you. We have an audience question, so I'll quickly read it. This question is from Mr. Vinod Vasan. Mr. Vinod Vasan wants to ask Kishore, technology involvement in risk and operation assessments is increasing in the lending business. These tech-based assessments, do they give more confidence to the lenders to sanction higher limits to borrowers compared to the olden times? And he's also asking Ravi, our other panelist, how technology is changing the factoring business. So Kishore, would you like to take this
Sure,
first?
Ram. Sure, Ram. It's a great question from Vinod. See, one of the newer things that we are talking about is, as a lender, I want to understand the credit worthiness of the person who's taking finance from you, right? So that is where the continuous credit assessment, it's important because I cannot rely on something that I've done in the past, say 6 months, 1 year, and then take decisions based on that. Can I do a continuous credit assessment? Is something we need to answer, and today there is a possibility because the avenues for data collections, the data ingestion is so much. There is a centralized repository for, say, credit assessments. There are data available through internet media. I could actually do a sentiment analysis about the company itself and draw a sentiment whether it is a negative one or a positive one or a neutral. And then I take a call as to whether the credit worthiness is actually better, is becoming better, or is it going worse. So these are really enabling me as a lender to take more informed decisions, more decisions which are comparable or comparable today as against what I've taken in the past. So that way, my ability to lend and mitigate the risk associated with lending is drastically reduced.
Okay, okay. Ravi, would you like to answer the second question as to how technology has changed the factoring business?
Yeah, so I touched upon it earlier. Primarily, the information Kishore also touched upon that the availability of the information which was not there today through various technological information and the the credit bureaus availability of information, you are able to take that decision and view that information. On the perspective of factoring, of course, it has changed quite a drastic change, which is there. Now, factoring itself is I would say, a modern solution as compared to the traditional banking solution. Why so? Because the information in factoring is much earlier available. You don't have to be completely dependent on. Of course, you have to see technology as a more enabler, that the information flows asymmetrically, and the validity of the information. So factoring being, an underlying transaction led program or a product itself gives us an early warnings, because like Kishore mentioned, the financial information, at best even the listed entities are required to publish quarterly, right? So that's also a lag of a quarter, for private companies possibly half year and annual, right? That's the information which is there. However, from a factoring perspective, that information is real time, because you are actually processing the underlying transaction, which is possibly supported by the credit insurance or the counterparty on the other side who's underwriting the buyer risk. And they are assessing the information on the ready basis, that whether the payments are getting paid on time, whether there are delays. So this is the information which is readily available at any point of time, which enables you a faster decision making process. The early warning signals about the changing trends of the buyer seller, how the performance is driving today's scenario. We are already seeing the changing dynamics because of the geopolitics which is going on, and the credit rate scenario which is increasing across the world. The inflationary trends are increasing, and possibly the buying pattern is seeing a downtrend. What customers were forecasting possibly at the beginning of this financial year, 40% jump at best, now they are saying that maybe from last year it will be a 15% jump. So that's a drop of 25% at the best, right? So this information is readily available of the changing dynamics, changing information flow, and we are actually the first ones to go and see and observe these transaction patterns emerging in our factoring business. So that's, realistically speaking, yes, the trends in the technology do come first impact where information is more readily used, more real time used, and which is where the factoring is definitely getting affected and positively impacted from the technology aspects.
Okay, okay. So it's almost 1 o'clock, and time is a precious resource. So we need to close today's discussions. This topic is so vast that I understand 1 hour is hardly enough to do justice to the vagary, to the several perspectives. But our panelists have provided expert views. I thank our panelists for interesting views. I thank our audience for their time, for joining in. Kishore, it was an absolute pleasure to have you on board, and we should be having you back over next few sessions.
Sure.
India Factoring conduct these sessions every once in every fortnight, so we should be coming back with similar sessions. Thanks, Ravi, as usual, expert views from your end. Thank you, everyone, and I'll sign off now. Thank you, and have a good
Thank,
day.
Thanks. Sure. Thanks, Ramanathan. Pleasure speaking.
thanks,
Thank
Ram.
you so
Thanks,
much.
Thank
Ravi.
you. Thank
Thank
you,
you.
Kishore. Thank you, Ravi. Good day.